Dr. ANCY, Department of Commerce, AJK College of Arts and Sciences, Navakkarai. Today we are going to discuss about the subject banking theory. Come, let's start our session. Firstly, what is a bank? A bank is a financial institution that accepts deposits from the public and creates a demand deposits while simultaneously making loan. That is, banks are intermediaries between depositors who lend money to the bank and borrowers to whom the bank lends money. The amount bank pays for deposits and the income they receive on their loans are both called as interest. So, what is a bank? A bank is a financial institution that accepts deposits from public and creates a demand deposits while simultaneously making loan. Next one is functions of a commercial bank. What are the functions of a commercial bank? There are two types of functions, that is primary functions and secondary functions. Let's see what is primary functions of a bank. First function is acceptance of deposits. It is the most important function of a commercial bank. That is, they accept deposits in several forms according to their requirement of different sections of the society. What are the kinds of deposits? First one is current account deposit or demand deposit, fixed deposits or time deposits, and savings deposits. First one is current deposits. What is current deposit? A current account, also known as demand deposit. That is, current deposit is also known as demand deposits. That is, a current account is also known as demand deposit account. It is mostly used by the traders and businesses who have frequent need of cash transactions on daily basis. That is, this current deposit will help the businessman to have frequent needs of cash transactions on daily basis. Second one is fixed deposit. The term of fixed deposit means deposit repayable after the expiry of a specific period. Since it is repayable only after the fixed period, it is termed as fixed deposit. Third one is savings account. That is savings deposit. We all know what is savings account. We all have our savings account in our bank. So what is savings account? Savings account is a demand deposit account that earns interest over time. When a customer makes a deposit, the banks pay them a set of percentage of interest in exchange of holding their money. So what is primary function? That is, first function is acceptance of deposit. It is the most important function of a commercial bank. There are three kinds of deposit. First one is current account deposit. Second one is fixed account deposit. Third one is savings account deposit. Second function, that is second primary functions of a loan is advancing of loans. What is advancing of loans? There is a secondary primary functions of a commercial bank. That is, a bank is to make loans and advances to all types of persons, particularly to businessmen and entrepreneurs. First, there are three types of loans. That is, first one is cash credit, second one is demand loan, third one is short-term loan. What is cash credit? Cash credit is referred as a short-term funding loan for a company so that it can meet its working capital requirements. Cash credit is a sort of loan that is offered to businesses by financial institutions like banks. Second primary function is advancing of loan. There are three types of loans. First one is cash credit, second one is demand loans, third one is short-term loans. First one is cash credit. So what is cash credit? Cash credit is referred as a short-term funding or loan for a company so that it can meet its working capital requirements, day-to-day working capital requirements. Cash credit is a sort of loan that is offered to businesses by financial institutions like banks. Second one is demand loan. What is demand loan? Demand loan is a loan that a lender can require to be repaid in full at any time. That is, a lender can require to be repaid in full at any time. This condition is understood by the lender and the borrower from the outset. Third one is a short-term loan. What is a short-term loan? A short-term loan is a business loan that can finance temporary business requirements. You repay the loan amount along with the interest before your loan tenure ends. For short-term loans, the loan tenure is usually 3 to 5 years. Third primary function of a bank is creation of credit. What is the meaning of creation of credit? Creation, that is credit creation, is the most significant function of commercial banks. While sanctioning a loan to a customer, they do not provide cash to the borrower. Instead of giving cash to the borrower, they will open a deposit account from which the borrower can withdraw the cash from the account. That is credit creation. So credit creation is the most significant function of a commercial bank. While sanctioning a loan to a customer, they do not provide cash to the customer directly. Instead of that, they open a deposit account from which the borrower can withdraw the cash from the account. Fourth one is clearing of checks. We all know what is check. So the check is a negotiable instrument. So how we can clear our checks? It is a process of moving check from the bank in which it was deposited to the bank on which it was drawn, and the moment of the money in his opposite direction account. This process is called the clearing cycle. Checks normally take 4 working days to process. That is, clearing process is normally 4 working days. If a bank holiday falls during the clearance period, the number of days will be extended accordingly. For example, a check paid it on Thursday in the evening before 3:30 p.m. When the following Monday is a bank holiday or public holiday, it will be available on the following Wednesday rather than Tuesday. If the bank is not holiday in Monday, we will get the amount in the Tuesday. So if it holiday, it will be available on the following Wednesday. Next is secondary functions. So what are secondary functions of the bank? First one is agency function. Bank act as an agent to the customer in different ways. First one is collection and payment of various items. That is, first one is bank collects checks, rent, interest on behalf of their customers, and also payment of taxes, insurance premium, electricity bill, water bill, etc. etc. So first function, agent function, is collection and payment of various items or various bills. Second one is purchase and sale of securities. So banks normally are more knowledgeable with regard to stock and share businesses. As such, they buy and sell and keep in safe custody the securities on behalf of the customers. Third one is letter of references. What is letter of references? That is agency function, third function. So bank also give information about economic position of their customers to domestic or foreign traders, and likewise provide information about the economic position of the domestic and foreign traders to their customers. So they will act as they will give letter of references to the domestic or foreign traders about the economic position of their customers. Next one is general utility function. This first one is locker facilities. We can keep our gold items in the locker. So banks provide locker facilities to their customers. People can keep their gold or silver jewelry or other important documents in these lockers. But we can't keep the cash in the locker. We can keep the gold or silver jewelry or other important documents in these lockers. Second one is general utility function as traveler's check and letters of credit. What is traveler's check? Bank issues traveler's check and letters of credit to their customers so that they may be spared from the risk of carrying cash during their journey. Next topic is classification of banks. First classification is central bank. What is central bank? They will issue currency. The leader of banking system and money market of the country, bankers to the government, aim to maintain price and stability of the economy. And in India, RBI is established in 1935. That is, RBI is our Central Bank of India. Okay, first classification is central bank, that is RBI, and established in 1935 in India. So its main function is issuing currency, lender of banking system and money market of the country, bankers to the government, and it will aim to maintain price and stability. What is commercial bank? It undertakes all the kinds of ordinary banking business, that is accepting deposits and lending money to the public. Second one is provides money and credit for commercial and trade activities. Receive short and medium-term deposits from public and grant short-term loans and advances to the public. Next one is supply working capital to the interest rates. Next one is discount internal and foreign bills. They provide agency services like collection of checks, dividends, interest on investment, issue of drafts, letter of credit, traveler's check, investment advisory services, clearing of checks, etc. Third type of classification is industrial bank or financial institutions. These industrial bank or financial institutions provide loans and fixed capital to the industries concerned. They provide long-term loans, credits for periods varying 5 to 15 years for industries to acquire fixed assets. They finance infrastructure developmental activities like construction of transport facilities, building of power supply stations, etc. Fourth one is exchange banks, that is authorized dealers in foreign exchange banks, export-import banks, etc. They deal in foreign bills of exchange, import and export of bullion. Do incidental services like opening of letter of credit, issue of foreign currency, draft and traveler's check, supply of information about foreign customers. They also provide credit loans and also accept deposits in foreign currency. They require huge capital and trained staff. They maintain branches in foreign countries and India also. As per Foreign Exchange Regulation Act, banks dealing in foreign exchange require permission from RBI. Next one is cooperative banks. Cooperative principles of mutual help and assistance. They grant short-term loans to agriculturalists, etc. Next one is land mortgage banks, presently known as Agricultural and Rural Development Bank, ARD, Agricultural and Rural Development Banks. Agricultural Development Banks, these banks help to develop our agricultural field. Then they supply long-term loans for a period of 15 years. They grant loan for permanent improvements in agricultural lands. They create negotiable bonds out of real estate like land, building, etc. They create negotiable bonds out of real estate like land, building, etc. They raise funds by floating debentures and by borrowing from government. Next one is definition, simple definition of a commercial bank. Commercial banks are the institutions that makes short-term loans to business and more in the process create money. There are types of commercial banks we already studied, that is deposit banks, industrial banks, savings bank, exchange banks, agricultural banks and foreign exchange banks, etc. Next one is forms of banking. What are the forms of banking? Forms of banking, there are different forms of banking. First one is unit banking. Second one is branch banking. Then retail banking, wholesale banking, group banking, chain banking, correspondent banking and universal banking. What is meaning of banking? We studied what is a bank. This one is what is the meaning of banking. Banking refers to a business activity in which the entity accepting deposits from the customers safeguard it and lends it to those who need it and earns a profit. So what is bank? Bank is a financial institution, helps to receive money from the public, receive deposit from the public and lend the money. That is a bank. What is a banking? Banking refers to a business activity. It is an activity in which the entity accepting deposits from the customers, that is bank, entity means bank, bank accepting deposits from the customers, safeguard it and lends it to those who need it and earns a profit. This is banking. This is the banking. Different countries of the world adopt different types of banking system. Basically, there are two types of banking system. That is, most countries, which is unit banking and branch banking. What is unit banking? Unit banking is a banking system in which one bank, generally a small independent bank, that renders banking services to its local community. What is unit banking? Unit banking is a banking system in which one bank, generally a small independent bank, that renders banking services to its local community. Unit banking refers to a bank that is a single, usually small bank that provides financial services to its local community. A unit bank is independent and does not have any connecting banks. It is an independent bank, unit bank. So there is no, unit bank is an independent bank and does not have any connecting banks and branches in other areas. So unit bank unit banking refers to a bank that is a single, usually small bank that provides financial services to its local community. It is managed by its own governing body or the board of members. That is, it is managed by its own governing body. Unit banking is managed by its own governing body. It has an independent existence. It has an independent existence as it is not under the control of any other individual bank or body or corporate. It is independent existence as it is not under a control of any other individual or bank or any body corporate. The unit bank serves a limited area and so it possesses an expert knowledge of the problem and basic needs of the localities and aims at resolving them. Next one is branch banking. What is branch banking? Branch banking refers to a bank that is connected to one or more other banks in an area or outside of it to its customers. This bank provides all the usual financial services but it is backed and ultimately controlled by a larger financial institution. That is, branch bank. Unit banking means a small single bank. Branch banking refers to a bank that is connected to one or more other banks in an area or outside of it to its customers. It will provide normal services but is backed and ultimately controlled by a larger financial institution. Branch banking, as the name suggests, it is one in which a bank has more than one office in a country or outside at different locations and renders banking services to customers of that area. It is a central office called as head office and other facilities, other offices which are set up at different locations to serve the customers are called branches. The branches are controlled and coordinated by the head office with the help of regional or zonal officers. So branch banking means it refers to a bank that is connected to one or more other banks. Its services is normal financial services. They will provide normal financial services and it has branches, zonal offices, head offices, etc. The bank is under control of the board of directors. The bank is under control of the board of directors. In unit banking, it is controlled by its own governance, but in branch banking, it is controlled by the board of directors and it is owned by shareholders. Each bank branch has a manager who looks after the management of the concerned branch of which he or she is in charge as per the policies and instructions laid down from the time to time head office. For the purpose of financial reporting, at the end of the financial year, the assets and liabilities of all the branches and the head office are summed up. Next topic is retail banking. What is retail banking? Retail banking refers to that banking which target individuals and the main focus of such banks is retail customers. Retail banking means that bank refers to that banking which targets individuals and the main focus of such banks is retail customers. It is also known as consumer banking or personal banking. Retail banking is the visible face of banking to the general public with bank branches located abundance in most major cities. Most retail banking is conducted by separate divisions of banks, large and small. Customer deposits gained by the retail banking represent an extremely important source of functioning for most of the banks. Loans such as housing loan, car loan, education loan, personal loans are some of the examples of loans given in retail banking. Next one is wholesale banking. Wholesale banking refers to banking services between merchant banks or other financial institutions. It is also known as corporate banking. Wholesale banking refers to that banking which targets corporate or big customers and their main focus is to provide services to corporate clients, that is MNC companies or etc. This type of banking deals with larger clients such as corporations or other banks or financial institutions, merchant banks, etc. Wholesale banking services include currency conversion, banking services that includes currency conversion, working capital financing, large trade transactions and other types of services. Wholesale banking is meant to describe financial practice of lending and borrowing between two large institutions. Banking services that are considered wholesale are reserved only for government agencies, pension funds, corporations with strong financials and other institutional customers of similar size and nature. These services are made up of cash management, equipment, financing, large loans, merchant banking and trust services among others. Next is group banking. Group banking means it refers to the system of banking in which two or more banks are directly controlled by a corporation, an association or a business trust. That is, group banking refers to the system of banking in which two or more banks are directly controlled by the corporation, an association or a business trust. The holding company may or may not be a banking company. The holding company may or may not be a banking company, although each bank maintains its separate entity. But business is managed by holding company. This type of banking was popular in USA between 1925 and 1990s. Advantages of group banking. Each member of bank retains its separate entity and maintains its board of directors, but at the same time, grouped banks enjoy the benefits of centralized administration. There is greater liquidity and mobility of resources. In case of crisis, funds can be transferred from other banks also. There is economy of advertisement expenditure. There is also a common purchasing agency which leads to economy in purchases. Services of experts can be made available to the member of banks, manage their business efficiently. Common standardized accounting system improves the working of the member banks. Large-scale banking operations allow superior credit facilities. Then what is the limitations of a group banking? The control of member banks under the group banking system is less direct and more flexible. That is, group banking system, the control of member banks under the group banking system is less direct and more flexible. Thus, effective supervision is not possible. Efficiency of member banks is adversely affected by the management of the holding company, which uses the bank as vehicles of manipulation and speculation. The failure of one bank has its adverse effects on other member banks. The common purchasing agencies often indulge in corrupt practices. That is, first limitation is control of member banks under the group banking system is less direct and more flexible. Thus, effective supervision is not possible. Second one is efficiency of the member banks is adversely affected by the management of the holding company, which uses the banks as a vehicle of manipulation and speculation. Third one is failure of one bank as its adverse effect on other member bank. Fourth one, the common purchasing agencies often indulge in corrupt practices. Next type of bank is chain banking. Next form is chain banking. What is meaning of chain banking? It is a banking system where the same individual or group of individuals controls two or more banks as against control by the holding company under group banking. This is done by stock ownership in two or more banks. Stockholders or stakeholders directly or through their nominees exercise the control of competing banks. That is what is chain banking. It is a banking system where the same individual or group of individuals control two or more banks as against control by the holding company under group banking. The management can also be established by a board of directors that can effectively create a network and undertake supervision of banking activities. Chain banking system took shape in USA around 1925 when 33 chains were coexisting having ownership in 933 banks. The purpose was to maximize profit and goodwill in the market. The purpose of the chain bank is to maximize profit and goodwill in the market. The banks which entered into chains within the community had little scope of competition. There is generally no holding company to control the interest of banks. Thus, the underlying principles of chain banking are a small group of persons own and control a number of independent banks. Each bank carries its operations in independent way. Each bank carries its operations independently without any external interference by any holding company. Every member of the chain retains its independent identity. Next one is universal banking system. What is universal banking system? Universal banking system in which banks provide a wide variety of financial services including commercial and investment services. It is a place where all financial products are available under one roof. Universal banking is common in some European countries including Switzerland. Universal banking combines the services of a commercial bank and an investment bank, provide all services from within one entity. The services can include deposit account, a variety of investment services, and may even provide insurance services also. Universal banking is done by very large banks. These banks provide a lot of finance to too many companies so that they take part in the corporate governance of these companies. These banks have a large network of branches all over the country and all over the world. They provide many different financial services to their clients. Next, we can see what are the advantages of universal banking. First one is investors' trust. Universal bank holds stakes, that is equity shares of many companies. These companies can easily get other investors to invest in their business. This is because other investors have full confidence and faith in the universal banks. They know that the universal bank will closely watch all the activities of the companies in which they hold a stake. Second one is economies of scale. Universal banking results in economies efficiency. That is, it results in lower cost, higher output and better products and services. That is, lower cost, higher output and better products and services. Third advantage is universal bank is resource utilization. Universal banks use their clients' resources as per the client's ability to take a risk. If the client has a high risk-taking capacity, then the universal bank will advise him to make risky investments and not safe investments. Similarly, clients with low risk-taking capacity are advised to make safe investment. Today, universal banks invest their clients' money in different types of mutual funds and also directly into the share market. They also do equity research so they can also manage their clients' portfolios. Fourth advantages of universal banking is profitable diversification. What is profitable diversification? Universal banks diversify their activities so they can use the same financial experts to provide different financial services. This saves cost for the universal bank. Even the day-to-day expenses will be saved because of all financial services are provided under one roof, that is in the same office. Fifth advantages of universal bank is easy marketing. The universal banks can easily market, that is sell all their financial products and services through their many branches. They can ask their existing clients to buy their products and services. This requires less marketing efforts because of their well-established brand name. For example, Bank of Australia or Bank of Switzerland may ask their existing bank account holders in all their branches to take house loans or insurance to buy their mutual funds, etc. This is done very easily because they use one brand name for all their financial products and services. Next one is one-stop shopping. Universal banking offers all financial products and services under one roof. One-stop shopping saves a lot of time and transaction cost. It is also increases the speed or flow of work. So one-stop shopping gives benefits to both banks and their clients. Then next is disadvantages of a universal banking. Different rules and different regulations. Universal banking offers all financial products and services under one roof. However, all these products and services have to follow different rules and regulations. This creates many problems. For example, mutual funds, insurance, home loans, etc. have to follow different sets of rules and regulations, but they all are provided by the same bank. Second disadvantages is effect of failure on banking system. Universal banking is done by very large banks. If these huge banks fail, then it will have a very big and bad effect on banking system and the confidence of the public. For example, recently Lehman Brothers, a very huge, large universal bank failed. It had very bad effects in USA, Europe and even India too. Third disadvantage is monopoly. Universal banks are very large, so they can easily get monopoly power in the market. This will have many harmful effects on other banks and the public. This is also harmful economic development of the country too. Fourth demerit is conflict of interest. Combining commercial and investment banking can result in conflict of interest. That is, commercial banking versus investment banking. Some banks may give more importance to one type of banking and give less importance to other type of banking. Next form of banking is corresponding banking. A corresponding bank is a bank that provides services on behalf of another equal or unequal financial institution. It can facilitate wire transfers, conduct business transactions, accept deposits and gather documents on behalf of another financial institution. Correspondent banks are most likely to be used by domestic banks to service transactions that either originate or are completed in foreign countries, acting as domestic banks, agent board, etc. So, let's conclude our class. Today we learned about what is bank, what is banking, what are the functions of bank, what are the types of bank, what are the classifications of bank, what are the forms of banking. Thank you for watching. Thank you.